In New York at Minds and Money, I'm with Rick Rule of Sprott U.S. Holdings. Rick, thank you for being with us today.
Pleasure, thank you.
So can you talk to us about your talk? You had basically a topic of how to win and lose in natural resources. Let's go over that.
Yeah, the beginning was to talk about what I call mining clichés, the truisms in mining that so many of us forget in a bull market. Things like the fact that it's extremely cyclical, it meaning this market,
right.
Extremely cyclical, extremely volatile.
Mm-hmm.
The bear market that we've been through took the TSXV down by 90%, which terrifies people.
Right.
But it means all other factors being equal, that it's 90% more attractive. In other words,
Right.
it's cheap.
Right.
It's also very volatile. This is a market that can fall down by 50% for no reason. The stocks can increase by 20% or decrease by 20% for absolutely no reason at all. If you have the ability to stomach cyclicality and volatility, this
Right.
works for you. If you don't, you're going to be a
You're
victim.
going to be afraid, right? So what are some mining cliches that we can go over?
In the small cap, I would define small cap below $1 billion market cap space. We think of it as an asset intensive business, but actually the odds against these assets are very high. So you find out actually this is more of a research and development
Right.
business, a people business. You have serially successful people in this business, and you need to hang out with them, and you need to avoid the rest.
Right.
You need to find the Robert Friedlands, you need to find the Lucas Lundins, you need to find the Bob Quartermains and the Ross Beatties. You need to find the serially successful people, and you need to confine your efforts to those people and forget the rest. Yes, you will miss the occasional winner, but statistically they don't matter.
Right, and you've met these people and you hang out with these types of people. What's common about them when they're investing?
Drive, curiosity, and the ability to work through the bad periods. They all understand that money is made in bear markets, not bull markets. It's
Right.
harvested in bull markets. So in bear markets, in the 2014-2015 depths, while the tier 2 players are taking 2-year vacations, the Ross Beatties come out of retirement, the Robert Friedlands go into hyperdrive,
Right.
the Lucas Lundins acquire assets. They all make their money in bear markets and they cash their checks in bull markets.
Wow, all right, very good. Now lastly, let's talk about gold. What's driving the price of gold right now, and what do you expect for 2017, 2020, 2025? What's going on?
I'm a gold bug, so let's get that out of the way first.
Right.
What's attractive to me is that the gold price is doing well in US dollar terms with the US dollar strong.
Right.
That's happened twice before in my career. Once before you were born in 1975.
You've mentioned that to me before.
The next time in 2002.
Yeah.
If past is prologue, in both cases the US dollar rolled over and gold did very well afterwards.
Right.
I don't know if that'll happen this time. It may not. The second thing which is very attractive to me is that the gold equities have not kept pace with gold. Now last year the equities really outperformed. So they needed a breather. But the truth is that the breather has become a bit excessive. We believe if the gold price continues to do well, which we also believe it will, that select gold equities at least will have to play catch up. So
Right.
we see a sort of a 12-month time frame that's particularly benign for gold equities investing.
Right.
I want to leave one other thing with you
Yeah,
that
of
your
course.
readers should pay attention to. I believe it was J.P. Morgan, but it may have been Morgan Stanley, authored a report about 9 months ago which suggested that about 1/3 of 1% of investable assets in the United States were in precious metals or precious metals related equities.
Wow.
The high point in 1981 was between 8 and 9%, and the 3-decade-long median was 1.5%. It is my supposition that gold won't win the war against the US dollar, but it will lose less badly. If I am correct, and if demand for precious metals and precious metals related equities in the United States rises to its 3-decade mean,
Right.
it would go from 1/3 of 1% to 1.5%, and that would be enormous. In my experience for the last 40 years, the most important determinant of the gold price, and I'm not just speaking as an American, has been the interplay between gold and faith in the US 10-year Treasury or the US dollar. The US 10-year Treasury has been in a bull market since 1982. Is that bull market over? I don't know.
Right.
But I think it's closer to the end than to the beginning. If you believe that the two assets are negatively correlated, and if you believe that the bull market in the US 10-year Treasury is closer to the end than to the beginning, then you believe pro forma that the gold market is closer to the beginning than to the end.
So every week I hear from you through Sprott's Thoughts. What's that all about?
We have a lot of fun with Sprott's Thoughts. It's a vehicle for exhibiting all of the various talents in the Sprott organization and bringing them to listeners and readers. I am certain, in fact, I guarantee that your readers will get their money's worth because it's absolutely free. And as an added inducement, if you go to our website, which is www.sprottglobal.com, and email me your securities portfolio, in the text of the portfolio, both company name and symbol, I will send you back an absolutely no obligation portfolio evaluation where I rank your companies and give comments. And we will subscribe you to Sprott's Thoughts, which, as I say, absolutely positively will give you your money's worth, both because it's good and because it's absolutely free.
Well, Rick, thank you so much for your insight today.
Pleasure, thank you.
To watch other videos from New York's Minds and Money Conference, be sure to check out SmallCapPower.com.